in that case, the client was making a risky bet, but with the understanding that, okay, they did their diligence on us, on our team, on the caliber of talent we had, on the roadmap we had, on the investors and the funding and the pedigree, what we had built before. Like, they went deep. It was not a hasty decision on either side. One of the first decisions I had to make is actually taking the initial UI of Addepar, which was built in Java Swing, and taking the better part of a year, basically rebuilding the whole thing, but on the web. Like, that's a very challenging thing to do really, really early on in a company's journey.
Hello, everyone, and welcome to Fintech Leaders, coming to you from New York City. I'm your host, Miguel Armaza. I'm a co-founder of Gilgamesh Ventures, a venture capital fund that backs early-stage fintech entrepreneurs in the US, Canada, and Latin America. If you enjoyed this conversation, I invite you to leave a review on Apple Podcasts, Spotify, or wherever you get your shows so more people can learn about fintech leaders. In this episode, I sit down with Eric Poirier, CEO of Addepar, a global tech and data company with over $5 trillion in client assets managed on the platform and clients in more than 45 countries. Founded in 2009 by Joe Lonsdale and Jason Mirra, Addepar has raised $500 million from a long list of great investors. Eric has been CEO of Addepar since 2013, and prior to that, he was amongst the first 20 employees at Palantir. In this episode, we discuss lessons for entrepreneurs on the importance of making bold technology bets early on, despite its risks, how AI and machine learning are helping solve problems in the investment management world, transitioning from software engineer to company CEO, and overcoming a big mindset shift, Addepar's go-to-market strategy, lessons learned from working with Peter Thiel and Joe Lonsdale, and a lot more. Eric, welcome to Fintech Leaders.
Miguel, thank you so much for having me.
I'm excited for this episode. I've been looking forward to recording this conversation for a long time. Big fan of what Addepar is doing, has been doing. Eric, I think to get us started, maybe take us a little bit through your journey, and then I'd love to zoom in on the state of asset management from your point of view.
Yeah, absolutely, Miguel. So I've been a software guy since I was a kid. I built a small technology company with my dad back when I was in high school in the late 90s, back when the internet was really young. And we were building simulation tools to help companies like eBay and Priceline at the time anticipate how their then two-tier architecture websites would, perform and behave when you had thousands of people hitting them at the same time. And so the reason why I mentioned that is that was really my first foray into building software that in turn helps other people build stronger businesses. So that's been really the arc over the course of my career. I ended up going to undergrad at Columbia. I studied computer science there. And after my junior year, I started working at Lehman Brothers in fixed income analytics. And so really that was my initial exposure to really how Wall Street works. And I also learned there in a pretty deep way over the course of my 3 years, how antiquated a lot of the core technology was within the bank. So they gave me a lot of autonomy. It was a really awesome first job for me out of college, where I was able to build much more modern software that leveraged this richness of data that Lehman had across the fixed income business and treasuries and agencies, all the way ultimately into mortgage backs and credit default swaps and the more exotic and collateralized side of things. And I just learned a lot in my 3 years there. I got to know Peter Thiel pretty well when I was an undergrad at Columbia. And so ultimately, after one of the senior people at Lehman explained that technology on Wall Street is a negative convexity business, and the only time you really get noticed, it's almost universally bad, I decided that was my time to make the jump and move to the West Coast and go to Silicon Valley. So I joined Palantir when that company was quite young, in the middle of 2006, and as a software engineer. So it was fewer than 20 people at the time. And Palantir at the time already had like a fledgling finance platform. So different from the intelligence and defense part of the business. So I ended up spending about 6.5 years at Palantir, helping build that finance platform and then really building the business around it, bringing that to market at some larger financial services firms like Bridgewater, Citi, Thomson Reuters, et cetera. And then ultimately, I left Palantir at the very end of 2012 to join Addepar, and I've been here now for just over 11 years.
Yeah, it's impressive. We're going to talk in a second about Addepar, but let's stay on Palantir for a second. So you were there at the very beginning. Palantir is still going very strong today. What is so special about the company? I think most outsiders don't understand the company very well.
Yeah, look, I think Palantir, I'll comment more on the early years simply because that's when I was there. The thing, my very initial impression of Palantir was in early 2006. And when I met the team at that point and I saw early versions of both the intelligence and defense platform as well as the finance platform, what was immediately clear is just the caliber of software engineering talent was completely unlike anything I'd ever seen before. I spent about 6 hours in Palantir's office at the time. It was this like very small office on Page Mill Road in Palo Alto. And I remember walking out of there and I told my then fiance, now wife, like, I think I was just in the Matrix. Like, that was unbelievable. And I have to join this company. And so I ended up taking I think like an 80% pay cut versus what I had at Lehman, because as with most Silicon Valley startups, they're not exactly paying much cash, but you get a bunch of equity. But I think that I mentioned that just because the mission alignment from the beginning, the caliber of the software engineering team, and the kind of motivation for starting Palantir in the first place, in large part was after the 9/11 Commission report came out, it was pretty clear that there was information that was knowable in advance, and had that information made its way to the right people in a timely way, using a really secure technology platform, perhaps the outcome would be different. So that was really the hypothesis. And the reason why Palantir, even in the early days, also branched into financial services is we saw the problems as isomorphic in the sense that you had a lot of different data systems that weren't really designed to work well together. And so if you built much more powerful, robust software on top, basically to pull the data out of these various systems, map it to an ontology or a taxonomy that's much more useful for decision makers, regardless of the domain that they're in, again, it's a way more kind of complete way to make high quality consequential decisions using the richness of information that's coming from a variety of different places.
You mentioned how at Lehman, you got to experience firsthand the technology or lack thereof at the bank. I had a similar experience in a previous life working at technology and ops departments and at Citigroup in a couple of divisions. And that opened my eyes to fintech. And it sounds like you had a similar experience. To talk about Addepar, I think it's important to understand the asset management industry and maybe the reason of being for Addepar is directly related to kind of the state of asset management.
Yeah, absolutely. So I'll blur the lines a little bit between asset management, wealth management, investment management, like the whole domain. And given that you mentioned your priors at Citi and from a tech and ops perspective and my priors at Lehman, like that's actually a good segue into why Joe Lonsdale started Addepar in 2009 and really the journey we've been on for nearly 15 years now. So just prior to Addepar starting, of course, was the global financial crisis in 2007 and 2008. And a lot of people found out the hard way during that crisis and during moments of market panic and credit crunch, et cetera, that they didn't have a single place to go to see everything they owned, where they owned it, how they owned it, what they were exposed to. And as a consequence of that, they couldn't make timely, precise decisions about their investment portfolios. And so it's a very kind of conceptually obvious problem, but it's actually a very, very challenging problem to solve in a complete, timely, accurate, secure way. And hence why we took a pretty dramatically different approach than what had been tried for decades prior to that. Like we treated it first and foremost as a very deep technology problem where we recognize you actually have to build the underlying infrastructure, the data model, the data pipelines to ingest data from loads of different places, but really pull it into a unified data format and representation. And only then can we show each and every client a complete view of everything they own, but do that and represent the details also in a complete way, so that the first use case we went after was consolidated performance reporting. And in order to calculate performance, you need not just, for example, the value of each account or the value of each security that you have in that account, but you need the full transaction record. Like, when did I buy this asset? For publicly traded stuff, like when were their corporate actions? For investments in private equity and venture, it's like, when did I make the commitment? When was capital called over time? When were distributions paid out? Which portion of those distributions are recallable? So there are all these complexities, all these nuances for each and every investment type, and the bifurcation of that in the public world versus the private and alts worlds. We really just set off from the very beginning to solve for the entirety of these really complex investment portfolios in order to mitigate the risk that had manifest during the financial crisis, so we can bring, frankly, a more robust set of capabilities for the people around the world who are accountable for the largest, most complex portfolios. I think we all witnessed what happens when you have a relatively small number of very, very large portfolios that behave badly, and the nature of compounding risk and cascading risk and how that just can ripple through the industry and cause a lot of damage. So that's why we started Addepar in the first place. And that mission, it's been remarkably consistent through time. And this industry has been, for a very long time, built on point solutions, not really an integrated platform. So, for example, each and every bank will have their own internal tech, their own stack. Oftentimes, they actually have multiple different systems because they've grown through acquisition, and those systems aren't particularly well integrated. But then from the perspective of the investor, if I have investments across public assets, I have investments in private funds, I have investments in real estate, et cetera, I just have data everywhere. There's like a million islands of data that, again, it hasn't historically been well integrated. So that's why we saw the importance day one of really just having a data model that can encapsulate all of that, and then having just a really rigorous, highly tech-enabled way, capturing the data, quality controlling the data, securing the data, and then once all that data is assembled in a common platform, then making that data useful by building a whole bunch of different applications on top for reporting on portfolios, for analyzing portfolios, for doing client portals, for billing clients, et cetera, and wrapping all of that in an open ecosystem so that other people, whether clients of ours, partners of ours, just other entrepreneurs, can build on top of that platform, because we want to encourage innovation really across the whole space.
So you've mentioned a lot of the requirements to even get started, and also what was your goal. Can you think, to make all this magic happen, to actually build a technology, can you think of some decisions or key technological innovations that were important as you've kind of developed the platform?
Yeah, look, there were many, many consequential decisions over time. And I'm happy to go into some details there. Just before I do that, though, like, you're completely right where, having built out Palantir prior to Addepar, Joe and I had a recognition that, hey, we're playing a long game here. Like, this isn't like hey, build it in a year. And then it takes a long time and a really dedicated, concerted effort to build the type of platform that Addepar has built over the course of the last 15 years with some of the best software engineering talent on the planet, as well as a variety of other capabilities. But problem number one, frankly, is attracting a world-class team and convincing them that this problem is worthy of their time. And then having the culture and having the environment where, again, these unbelievably high caliber people are able to do incredibly impactful work. And so that's sort of step one. If you don't get the talent right, you don't get the culture and environment right, all bets are off. Once you have that right, then where do we focus our time? Where do we focus our energy? We did recognize since early days, again, getting the foundational pieces right with respect to data, with respect to security and privacy, and having that manifest in a more complete, integrated understanding of these investment portfolios. Like, that's kind of use case number one that's pervasive across the segments we serve, the geographies we serve, and the types of humans within each one of the firms we serve who are using Adapar as their de facto source of truth and system of record for everything in their portfolio. And so I actually joined Adapar a little bit more than 3 years in. So Joe started it with Jason Mirra, who was actually an intern on my team at Palantir prior, back in 2009. And I joined beginning of 2013. And one of the first decisions I had to make is actually taking the initial UI of Adapar, which was built in Java Swing, and taking the better part of a year, basically rebuilding the whole thing, but on the web. Like, that's a very challenging thing to do really, really early on in a company's journey. We were effectively pre-revenue. We had less than $1 million in revenue. We had a handful of clients. We had a lot of different tech challenges at the time. And so making those types of bets early on, like, these are very risky bets any way you cut it. But that was one where it was, okay, if you don't put the UI in the web, or on the web rather, then some of the enterprise clients were simply unable to use the software because of security, like man-in-the-middle attacks and stuff like that. But from our perspective, it was like, we must do this. There's no other option, even if it's a really painful thing, because it means kind of by definition, we have to take the feature set we already built and like rebuild the same thing without building new stuff. And then after we were done that, then we could make much more radical advances to the front end feature set, to the back end data processing. But that was one moment in time when I was brand new at Adapar. A different moment in time that I'll talk through is we had a very large wealth management firm. This is back in, I want to say 2017, 2018, make a huge bet on us. And we in turn made a huge bet on them to say, look, we want all of our teams, all of our end clients to standardize on Adapar as our core platform. And the combination of their number of accounts, their number of advisors, number of clients, et cetera, it's like 20 times larger than our like overall client base at the time. And so again, it was a bet the business type of moment, but not just on that one firm. It was more bet the business that we can scale this business by growing from serving just single family offices and RIAs to also serving banks. And that's going to benefit all of our clients because we're able to process much, much more data in a much faster way. But that again required a super deep investment in the underlying platform, in the cloud infrastructure, and the security, really just to pass muster with banks. And fortunately, we did make that bet at that time. And that's one of the reasons today we have many of the world's largest banks as clients. And almost without exception, those banks are expanding what they're doing with us at quite a clip. And like, that's how you get rewarded by making the much more ambitious tech bets early days. And it's just been part of our DNA. So I just wanted to share some of the, again, really important decision points where if you don't make those bold bets, maybe it feels like you're mitigating some risk short term, but it basically means you're on your way to obsolescence quite quickly.
I actually know an entrepreneur going through a very similar decision right now. Did the asset manager at the time understand the undertaking that it was for you? How did you manage the sale?
Yes, we were very transparent about it. We said, look, it's risky business on both sides. And ultimately, there's this sort of trite language around partnership and so forth that people can bandy about. But like, then there's also like a very real version of partnership where in that case, the client was making a risky bet, but with the understanding that, okay, they did their diligence on us, on our team, on the caliber of talent we had, on the roadmap we had, on the investors and the funding and the pedigree, what we had built before. Like, they went deep. It was not a hasty decision on either side, and we did the same level of diligence on them. And so it was simply with the most senior people on both sides saying, this is going to take time. And there are going to be moments in time where this is going to get really hard. And we both have to keep leaning into it, like shoulder to shoulder until we're done. And we're not doing this with a second firm. We're doing this with you guys. And you're doing it with us too. Yeah, and we'll get to the other side of it. So long as as we maintain that focus, so long as we're hyper transparent in where we are, what we're executing, what's next. And so just having that level of alignment up front and really just mutually committing until the job is done. And so again, like we're naturally wired in a longer term thinking way and approach. It's not just quick wins. That in its own right is somewhat unusual for companies that we're at the stage that Addepar was when we made that bet. But that's, I think, what separates really your best enterprise software companies, because like that's what it takes. That's what it takes to get there. And you always, like, when you hit different inflection points along the way, the only way you get past that inflection point is by having a client who's a stretch, and they know they're a stretch because you're transparent with them and they're still willing to do it, and you just lock arms and you get there.
Let's zoom in to talk a bit more about your clients. Historically, I know that today you work with banks, with institutional asset managers, but historically, probably your most important segment of customers, and correct me if I'm wrong, is family offices. And family offices, there's this saying in the industry that if one family office, only one, because they're all different. How did you kind of navigate the go-to-market specifically in this segment?
Yeah, so you're right that family offices are a very important segment for us. And we have many hundreds of single family offices. One thing I'll mention actually is 100% of our clients, whether single family offices, multifamily offices and RIAs, banks, institutions, et cetera, they're actually all using the same underlying platform, the same code base. It's all hosted for all of them. And the reason why we've done that, and that's one of the things we've been dogmatic about over time, is so that as we advance the software to benefit this family office or that bank, all clients benefit from those advancements. And we were getting pressure early days to cleave off the code base for this specific client or post it on-prem for this other client. And at every turn, we just said, no, we're going to build a proper platform that's highly configurable so that it can really fit like a glove, firm by firm and client by client. So to your point about single family offices being remarkably different than each other, that's true. And the way we've been able to solve for it is by, again, designing for that upfront. I'd say the same thing about RIAs. RIAs really, their path to independence and what they're able to convey to clients and how they're able to bring that to life and showcase that and deliver on that. It's a unique value proposition that's really purpose-built and tuned for that end client base that each and every RIA is solving for. And so Addepar's software is highly configurable. For each client, it's white labeled. And that's not just a cosmetic thing to have their logo and their brand and everything like that. Well, of course we do that, but it goes much, much deeper, where we want the firms that we're serving to really be able to lay out the data in their environment, lay out their views and their reports and their templates in the way that's most intuitive to them. It's their firm. They're the ones managing the investments. They're the ones managing the client relationships. And so we're giving them the points of flexibility to really make that exactly right for them. And so that's really how we've overcome the very accurate description that each and every one of these is very different. That's more from a product perspective. Your question was also from a go-to-market perspective. And look, as with any business, like the first building trust, building credibility with the first wave of family offices, early adopters just have a different temperament, have a different mindset. They evaluate the demoware or the vaporware that you build, and a few of them sign up and they take that risk and they go on that journey. And then once those clients turn into referenceable clients, then they're willing to share that story with the next set of clients. And so the kind of crossing the chasm and the whole adoption cycle, like that's very real. And once you actually have something that works and that's proven and you have happy clients, that journey just gets easier and it can keep compounding over time. And so we've just seen that time and time again as we continue to, like we now have more than 1,000 firms using Adapar. Those firms stretch across 45 plus countries at this point. And in the family office dynamic specifically, families tend to be pretty private, but they're closely connected with other families within their geography or what have you. And so because we actually build something that does what we say it does, that as a way of creating word of mouth and leading to more inbound for us. And that's what results in, again, a steady increase in number of firms who are signing up for Addepar quarter by quarter.
Staying on your clients a little bit, how have you observed their demands evolved over the last decade? And also where are these demands going as they get more digitally savvy?
I'll note two different things. Number one, almost without exception, firms using Adapar have not only public market assets, so stocks and bonds and cash and stuff like that held at custody banks, but they also invest heavily, or at least in part, in alternatives. So private equity, venture, hedge funds, real estate, et cetera. And so Adapar, I think right now has the best total portfolio solution, inclusive of being able to go really, really deep on the alt side. That's a really important differentiator for us. And that's a very, very common pain point in the industry. And because we can solve that so uniquely well, that's really what, again, catalyzes the growth that we have. So today we have across our clients about 250,000 unique LP interests being tracked on Adapar. That's an enormous, enormous data set. It's about 40% of the more than $5 trillion we have on the platform are in alternatives and privates and other non-marketable securities. So the data we have on that it's basically the biggest data set on the planet. And so we're able to just iterate with clients so that they can make that much better decisions about which investments to make. And they can handle the data in an increasingly automated way about those investments they've already made. And then we can help them not just using a rear view mirror to understand where they are and where they've been, but also create the windshield and the headlights that from an investment perspective, they can think about the future and think about, well, what are the trade-offs of this investment versus that? And how do I want to continue to change my portfolio over time to best align with my goals, objectives, preferences, et cetera. So it really all starts by like getting the data right in a complete way, including that alts and privates part. So you have a really clear picture of where you are now. And then you want to get a really clear picture of like where you're trying to get to and by when. And then using the instrumentation to navigate your way to that future state. Like that's really the right kind of conceptual model of what we're after with our clients. The other part I'd note, since you mentioned the digital transformation and journey and some of the, I know that that's oftentimes kind of characterized from like a generational perspective, like younger generations care more about that. What I'd say is actually like COVID was a massive catalyst for that, because all of a sudden in the wealth management worlds, an advisor could no longer sit with their clients in person with a spiral bound report and flip the pages together and stuff like that. All of a sudden that was conversations that were happening over Zoom. You couldn't physically sit, or many people weren't physically sitting with their clients. And being able, fortunately, Addepar had already built the right software, built it the right way. And in March of 2020, in April of 2020, we were already doing webinars saying, look, this is a super tough moment for everybody for lots of different reasons. But from the perspective of wealth managers who have been running their business in a way that's not changed much for a long time, where you're using on-prem software, you're using point solutions, you have a very operationally heavy way of running your business, you rely on your mailroom to receive client statements. And if that's the way your business runs, here's the type of transformation we can bring about. We can onboard you without ever meeting in person. We can bring your data into our cloud native solution. We can make it available to you, and you can make it available to your clients in whatever way you choose, whenever you choose. And that was just like a radical step forward for a lot of these firms. And so I was more just making the point that yes, it's true, obviously, for generations of people who have had iPhones since the beginning, they're naturally going to have a propensity to more self-service, more digital experiences, but it certainly doesn't stop there. Everyone in Q1 and Q2 of 2020 had to pretty dramatically shift, how they think, how they work in very practical, very tangible ways. And that's really just accelerated this modernization, this digitization, and it's really just helped our business scale in a pretty insane way.
Well, on that point, here's maybe a topical question that's on everybody's minds that I'm sure you've thought about: the impact of Gen AI in the asset management industry. I've met in the last few months, including yesterday, entrepreneurs who are starting to build robo advisors, and there's different versions of it. Time will tell how well these perform. But from your point of view, where have you seen real innovation in the space?
Look, AI is a big deal for sure. AI is becoming very, very powerful, and it's compounding at a very rapid rate. I'm not saying anything new or novel there, but it's also just finding like being practical and being realistic about where it actually substantively adds value versus like where it's just kind of like the shiny new thing that like you can contrive use cases, but you don't really want to run a business in that way. So I think with that sort of healthy degree of pragmatism, and in certain cases bordering on skepticism of just like to kind of offset the hype factor, just being very tangible and being very grounded on like whether it's large language models or whether it's more use cases around machine learning that frankly have been around for decades, but it's now just that they're also advancing at a pretty rapid clip. We're using AI and machine learning very, very heavily internally. We're investing more than $100 million a year in R&D. The caliber of engineering team we have is like truly world-class. And so we have a bunch of different use cases where we are applying AI and machine learning. One of the most clear sort of themes and patterns is really just for work that's operational and manual in nature, just how can you, have some threshold of that work that you can have the machine do it instead, but have a human in the loop, where here's one example of that. I was mentioning that many, many of our clients invest in alternatives. So if you invest in a private equity fund or a venture fund, every quarter you get a capital account statement. And every so often you get a capital call notice or a distribution notice or what have you. These are all PDFs. They get posted on a portal or sent to you via email or in snail mail or whatever, just like very sort of old-fashioned ways of transmitting that data. And with the capabilities now of both large language models as well as different machine learning techniques, we're able to read in that information that's unstructured or semi-structured, having a machine in the loop to do a disproportionate amount of that lift, but on a data point by data point basis, score how certain are we that we get this data point right. And if it's below a certain thresholds, that's where we'll have a data operations person. Just, again, manually look at it, just make sure that, hey, we got it right, or we didn't get it right. And then you kind of nuance the model and keep refining the model over time. But like, that's one very practical application that really takes one of the more painful and one of the more pervasive problems for anyone who invests in alts. It just kind of makes that easier over time. And so we're certainly not done on that problem. We're investing heavily there. Again, as I mentioned, because our clients invest heavily in alts, and this is universally a pain point for everybody. I should also note that there are other companies who are purpose-built around exactly that use case, and we partner with all of them. And so as an open platform, again, we just want clients to be able to pick and choose the right parts of their stack to their satisfaction, but we're also making bets ourselves, just given the scale we're operating at, given some of the natural advantages we have and the opportunities we have. So that's one very practical use case. There are lots of other use cases just in like operational efficiency internally, in anomaly detection with data. Like there's chatbots to assist clients with help cases and support cases. And over time, just like refining how clients interact with our entire software stack. So you don't have to be an expert on all the various feature functionality. You can just use more plain language, whether English or a different language, just to navigate and make the software do the heavy lifting.
Yeah, if you can have a tool that truly helps LPs meet capital goals. I mean, I know for some people that might sound small, but I've had LPs of ours complain about that and even prepay just to avoid dealing with those capital calls. Eric, so I want to zoom in on going global, because until I talked to you, I didn't know this stat, but you have customers in over 45 countries.
That's right. Yep.
How did that happen? How did that expansion beyond the US happen?
Yeah. So typically our first client in a new country is a single family office. And Adapar, again, is, I think, far and away the strongest solution for single family offices because we're purpose built to deal with the complexity and deal with the level of customization that we were talking about before. And so we just over time organically grew into new regions. We'd usually receive inbound from a family, and we weren't outbound prospecting, but they heard from a friend who was using Adapar, who was really pleased with that, and we're encouraged to get in touch. So it's from a go-to-market perspective, it's actually, we were more opportunistic based on inbound that we were getting. And then we'd be really clear about, okay, here's what the product does. Here's the service model and support hours and stuff like that. And so back in, call it 2017, 2018, 2019, usually that growth was still in the Americas. So we were doing quite a lot, like in Canada, in Mexico, LATAM, South America, et cetera, and just kind of within the time zones, because that's how our data operations team and our support model and stuff like that had been built out at the time. Now, that said, one of the interesting, like during COVID, when everyone locked down and we saw this crazy acceleration of the business in 2020, like really any company, we very radically shifted our mindset where no employees are working in the office, whereas all employees have been working in the office right before that. And so we just got really, really good really quickly at hiring employees from all around the US. And then furthermore, we established a presence in Edinburgh before we were able to travel to the UK. So we were interviewing people over video saying, hey, we're setting up shop in Edinburgh. Probably not going to be able to meet each other for at least months, but do you want to come join this company you've never heard of? So we set up shop in Edinburgh, like virtually. And now, of course, we have a physical presence there. We have about 100 people in Edinburgh. We have an office in London. We just crossed 100 people in India. Now we have an office in Pune. And we also have a very large hybrid or remote workforce. And so we've grown from 300 people to nearly 900 people today, 300 people at the beginning of COVID, so about 900 now, really around the globe. And we now have 24/6 support, data operations motion, where the teams, for example, in India are ensuring that our clients in Europe, that their data is in and right before the market opens in Europe. And our teams in Edinburgh are making sure that the data is in and right for our clients in the US. And our teams in Salt Lake City are making sure that the data is in and right for clients who are in APAC. And so we now have this follow the sun in what we call pass the book motion that allows us to really operate around the clock. And that's really enabled us to go from opportunistically growing kind of country by country to much more strategically growing country by country. So we're now setting up small teams in Sao Paulo, in Dubai, and over time we'll add additional regions. And that's simply because we're just getting a tremendous amount of activity and inbound in those regions, not just from family offices, but also from larger institutions, from banks, from wealth management firms, et cetera. So yeah, it's like over the last, call it 5 years, the company has really gone global in a very significant way. And that arc is just going to continue compounding.
Eric, at the beginning of this conversation, you mentioned closely working with Peter Thiel about 2 decades ago. I'm sure you guys are still fairly close. What have you learned from working with him?
Yeah, so I actually got to know Peter in sort of an unusual way. When I was an undergrad at Columbia, at the very beginning of freshman year, I actually started volunteer teaching in South Bronx and teaching junior high school kids robots and programming with robots and stuff like that. And then over time, like I just set up my own curriculum, and I was using these Lego Mindstorm robots to teach 9th, 10th, 11th graders programming and physics and calculus and things like that. I, of course, wasn't using any of those words, but just kind of showing them the concepts. And I needed capital to buy more Mindstorm robots. And in sort of an indirect way, like I ended up getting funding, from a group that Peter had been involved in. And that group in parallel was setting up occasional dinners where successful entrepreneurs would host aspiring entrepreneurs. Peter at the time was running PayPal. And I was really just fascinated with how that company had really bucked the trend, like the tech kind of drawdown, of course. And so that's where he and I met in the first place in like 2001, I think. And at the time, I was also treasurer for my class at Columbia, which made me kind of de facto event coordinator because I was writing the checks for everything, like our barbecues and whatnot. And so I thought it'd be a cool idea for him to come talk to upperclassmen in computer science about Silicon Valley. And so that's how we continued our conversation. So he was going to give a talk, but then PayPal sold to eBay and his calendar got very filled up as a result of that. But we kept in touch. And so the thing that's always struck me about Peter's obviously a brilliant guy. He's a fiercely independent thinker. We have very different views on certain things, but I think that there's always just been, like, I've always admired just his intellect. He's unbelievably well read. He has, I had mentioned before when I was at Lehman, I was working mortgage-backed securities and credit default swaps and all these like very exotic financial instruments. And when I was considering leaving Lehman and joining Palantir, I was considering leaving Lehman to start a company. And Peter and I did like a 3-hour brainstorm session. And I was just really keying in on how can we modernize parts of the financial system using technology. And I had been anchored on mortgage backs and the kind of the more exotic side of things. What I found immediately is like Peter actually knew that domain more deeply than most of the teams I was working with at Lehman. Just like how do you know this? And in so many other topic areas over time, I just find that like Peter's unbelievably well read, unbelievably well studied. He's just clearly a brilliant guy. So over the last I'm not nearly as close with Peter simply because like he's doing a million things, I'm doing a million things. We see each other from time to time, but really my interactions with him were more kind of a decade plus ago when I was at Lehman and then or in undergrad and then at Lehman and then early days Palantir. And beyond that, Peter's really not involved in Addepar. And so it's more just every so often we'll bump into each other at different events or social activities or what have you.
How about another person that we've talked about, and that's Joe Lonsdale. I think it was something that has to be admired by Joe is how he's behind so many successful companies, obviously Palantir, Addepar, OpenGov, Luminary is just getting started. There's more. What have you learned from Joe?
Yeah, absolutely. So Joe and I are very, very close. We've been working together for a very long time. Like Joe really is the one more than anybody else who convinced me to join Palantir back in middle of 2006. So we've been working together now for 18 years. So he left Palantir and started Addepar in 2009. And I was at Palantir up until the end of 2012 when it crossed through about 1,000 employees. And I was getting the entrepreneurial itch again. I was considering starting something. And Joe really walked me through what his vision was for Addepar. And I found it incredibly compelling. And so that's really where he encouraged me to join Addepar. And then he asked me to run Addepar when I was about 6 months in. So I didn't join as CEO, but that happened, call it half a year into my journey here. But, I think Joe, again, Joe was at PayPal early days. He was at Peter's fund, Clarium, for a bunch of years. And so, he's shares some of those same characteristics that I just mentioned about Peter, like unbelievably brilliant, super well read. I guess Joe just has an unbelievable eye for talent. And he takes the time to really deeply understand, again, very nuanced topic areas. And so he's a natural builder, he's a deep innovator, and he puts smart, passionate people who are very driven and really mission focused in positions where they can just like run super fast. And then he's able to just like cross-pollinate talent in this like unusual, really high quality way on a global basis. So he's like the just masterful kind of connector and convener across domains. So of course in Palantir it was like government and finance, whether intel, defense, then starting the businesses and investing capital in the businesses that you had mentioned, starting 8VC and making 8VC just a tremendous success, really building a level of credibility with portfolio companies, with investors, with other fund managers and co-investing and so forth. I think that it's just been remarkable from my perspective, just seeing Joe continue to grow as an entrepreneur, as an innovator, as an investor. But at every turn, really just like Joe has a level of just like intellectual like acumen that Joe in long form, from my perspective, is like the best form of Joe. I really enjoy listening to his podcast, for example. And when he and I are able to really spend dedicated time to go deep on topics, like that's I think where you really get. And so Joe's continues to be chairman of Addepar. He's founder of the company. So in that context, obviously we work together, but it goes pretty far beyond that. Like we end up spending quite a bit of time together in lots of different areas.
Eric, before I let you go, you made the switch, the jump from software engineer to CEO. Were there, and this is generalizing a little bit, but were there kind of mind shifts that you had to overcome? What did you have to overcome to make that jump from the software engineer mentality to company leader?
One of the kind of inherent competencies of software engineering is you take big complex problems and you break them down into pieces, and then you kind of order and sequence those pieces, you solve them one by one, and you build really robust solutions to them. And then like that's kind of the art of engineering, period. And software engineering is kind of a special case of that. I found that like actually building businesses is remarkably similar. Like, okay, we ultimately having a business that's centered on the technology, the software, the platform that we're building and the ecosystem that we're building. that's how we unlock value for our clients. That's how we unlock value for the markets. And so what I love doing, like the most satisfying part is like actually seeing that tech, seeing that software, seeing the data, seeing the platform unlock value for our clients. So kind of shifting from software engineer to business leader, CEO, it's really just having a continuous loop of like that whole value chain. Like, what are we building? How's it benefiting clients? How do we just keep that whole loop going? And so I think that the really important internal part, though, is as CEO, it's important for me to set the tone, the culture, the environment, the core values, again, that's most conducive for people doing their best work. And I care very deeply about people. There's nothing that makes me more satisfied than seeing exceptional people like truly do the best work of their careers. And so one thing I very, very much enjoy about my job is just, again, seeing that culture flourish, seeing the environment flourish, where you see both individuals, but also teams, and especially cross-functional teams, just make magic happen. So I can't help myself but be detail-oriented. I do still continue to go quite deep on the product and technology aspects of our business, and that'll always be the case. But really just seeing the full life cycle of the business and the arc from the client's perspective, and continuing to evolve the teams and grow the teams and really reward exceptional performance, like it's incredibly rewarding.
Well, that's fascinating. Eric, I appreciate you taking the time to join. I'm deeply honored. I am rooting for the success of Addepar, and I hope this is not our last conversation. It's one of many.
Awesome. Well, Miguel, thank you so much for having me. I very much enjoyed the conversation, and let's continue it going forward.
Thanks for tuning in. I hope you enjoyed this great episode with Eric, CEO of Addepar. If you want more interviews, make sure to subscribe, follow, and leave a review on Apple Podcasts, Spotify, or wherever you get your shows. It helps and truly means a lot. And if you have any suggestions or thoughts about the show, just drop me a line on Twitter or LinkedIn. Feedback is always welcome. Signing off till next week, I'm your host, Miguel Armaza.